So, Alexandru, how are you thinking about as a Gen AI company? How are you thinking about valuations right now?
Yeah, I think it's well, thank you very much, first of all, for having me. It's a really interesting conversation. I think, first and foremost, Synthesia was definitely started as a company to build useful technology, not as a vehicle to raise VC money. And so if you look at our funding rounds and you compare them maybe with some other companies that are active in this kind of AI video space, our funding rounds are relatively smaller for two reasons. One is that, unlike some of these companies, we're very thoughtful about unit economics. So we actually have a product that people like to use, but most importantly, we have a business strategy for how to make that product turn it into a profitable business. And secondly, it's because we're based in Europe, we're a global company in terms of our customer base. In fact, more than half of our revenue comes from North America, but our kind of center of gravity is in Europe. And I think from that point of view, I think investors are much more sort of realistic when they think about our, not just our company, but other companies that are here. Whereas if you are in kind of the Silicon Valley postcode, it's all driven by hype, by kind of storytelling. In Europe, it's a bit more grounded in reality and kind of the revenue you're making and the kind of the way you're growing.
Interesting. Alex, how about you? How would you have answered that question?
I think maybe a bit closer to A, I think, of the answers. I was just, the sort of warning signs, I think, and we've already spoken about some companies that are perhaps over-raised, and I think that was definitely a tendency quite early on with a lot of companies that were effectively just sort of wrappers around popular models. I think they struggled to sort of meet the kind of trajectory they'd need to justify some of the raising that they achieved quite early on. But the other one is we're seeing quite a lot of pre-product companies raising quite sizable rounds. So one might be World Labs is one. We've got Thinking Machines Inc. We've got SSI, which Yuri's already mentioned, where they might be working on some really interesting technology, but we're not really aware of what that technology is yet, but still raising quite substantial rounds. So yeah, I suppose of those, I'd probably be closer to A.
So now we're going to move into some of the straight Q&A portion of the webinar. As a reminder, please use the Q&A widget to submit your questions. While we may not be able to address all questions live today, we will cover the most common ones. If we don't get to your question, rest assured we will follow up with you directly. So just to kind of get us started, Alexandru, how did you find the fundraising market? Does it feel like there is easy access to capital at the moment, or is there a flight to quality? Put another way, we had a question come in from the audience prior to the webinar asking, how are investors figuring out which AI startups have long-term value and which don't? How are they identifying the froth?
Yeah, I think it's a very good question. And going back to sort of some of the fundamental principles of how VC funding used to work before we kind of got caught up in the generative AI hype. Investors are looking, when they're looking at your business, they want to make sure that you return the fund, right? They want to make sure that your valuation is sustainable, not just in the short term, but also in the long term. And if you can't return the fund, then what's left is essentially a lot of startups who have raised based on the potential of the founders. So, for example, founders coming from big tech that had worked on teams that were considered to be sort of on the cutting edge of AI, they're raising money not because they have a product or have achieved product market fit or have a business, but purely because they used to work in big tech and might be able to replicate the kind of AI research that they did there and commercialize it into a product. But the danger there is that, as we've seen, I think a few examples already, is that those companies tend to become acqui-hires. So those people will leave big tech, will start something that is kind of very frothy and very hypey, and then they'll be acqui-hired back into big tech and get a promotion and a substantial amount of stock and so on. And so I think that's kind of what's happening primarily in North America, whereas in Europe, I think the new generation of companies that we've seen especially in the last sort of 2 to 3 years, are much more focused on building a generational business. So obviously you've got businesses like Synthesia or 11 Labs in the UK, but you've got a few of the kind of more recent startups like Lovable that's powering. I think Lovable now is found in, I think 10% or 20% of web pages that have been published in the last year have had some Lovable code. And I think they are the kind of more focused on building something sustainable as opposed to being acqui-hired in 12 months.
So just to follow up on that, we had a question come in from the audience. Is there a tyranny of larger companies in terms of capital access? In other words, are small companies still getting money, or is most of the capital raise being driven by more established larger companies? I wondered if you had a take on that in terms of, is this an opportunity where small challengers can attract capital given the influx of capital, or is it primarily going to the biggest, the sort of already the deepest pocketed, the foundation models maybe, or something like that?
I think maybe a lot of the investors are realizing that the infrastructure layer, primarily the kind of foundation model and hardware sort of elements of that, are very quickly becoming either commoditized or dominated by a few players. And the more interesting activity in terms of funding is happening at the application layer, as Yuri was showing in his slides. So I think that's what you're seeing, most of the investors realizing that the value now is at the application layer, not necessarily at the foundation model kind of layer. The amount of capital you have to kind of sink into that to make a difference is now of the order of like tens of billions. And there are only a few funds or companies that are able to kind of invest that amount of capital into those types of ventures.
Right. Alex, we're a couple of years out from the launch of ChatGPT. Where do enterprises stand with AI deployment? And are they primarily buying or building or both?
So I'd say the broad story is we saw a rapid uptake of generative AI. And I mean, very rapid. We've got quite a lot of data back on this. But one of the really interesting findings is organizations even further through that journey than they thought they'd be last year, comparing year on year. There's a few reasons for that. One of the things we hear a lot is organizations effectively wanted to transition staff from unsanctioned, unlicensed tools like using ChatGPT, for example, into something that has enterprise controls around it effectively. And that trajectory means that a lot of organizations have adopted these capabilities very quickly. But our data is also telling us that the level of efficacy associated with these projects is relatively limited in some instances. So organizations haven't necessarily seen quite the scale of return they're expecting on that first wave of generative AI investments. And there's some exceptions, and there's some really interesting case studies of companies that have seen substantial amounts of value. But that's sort of the broad story, I'd say, that the technology has been taken up very rapidly, but potentially not as deeply as some organizations would have liked. Either it's not being used effectively, or the application areas it's been applied to haven't been as effective as they hoped.
Got it. Yuri, we had a question come in from the audience. CoreWeave is buying Core Scientific, which is pivoted from crypto hosting to AI and HPC. Do you expect to see more deals involving crypto hosting and mining companies to facilitate their switch over to AI/HPC? How are you thinking about the M&A market for that?
Yeah, I think the short answer is yes. I am not surprised that we're seeing this M&A, and this sort of cloud infrastructure business, you need to have scale to sort of be competitive. And I previously said in my presentation we've identified like 54 neo clouds. Eventually, there is going to be a lot of M&A between these 54. So eventually they're going to end up a much smaller number of these neo clouds, and probably CoreWeave could be one of the leaders, and then maybe some others. But yeah, I do expect like more. This is one reason, because there can be so many neo clouds, so you're gonna have M&A, you're gonna have consolidation at a certain point you're already having. But the other reason is that if you already have the data centers and you already have the energy that is connected to that data center, that is already very valuable, because there is a lot of people there talking about the lack of capacity. Demand is very high for GenAI tools, but capacity to service and to train these models is still small. That's why you're seeing all this investments in energy and everything. So, if you are a company that maybe struggles, doesn't have enough scale, but you have the assets, then obviously you are a very good target, a very good M&A target.
Yeah, and
So,
just to continue.
yes.
And just to build on that, there was a question around for hyperscalers like CoreWeave, where do the growth opportunities lie outside of continuing to scale? So maybe either organic opportunities, or I think CoreWeave has experimented with maybe adding in some software onto their neo cloud offerings. And so how are you thinking about that?
Yeah, I think they eventually, because this is very commoditized. If you're just taking chips from NVIDIA and putting them into data center and then renting them out, this is just a commodity. Everyone can do. Well, I mean, everyone with capital can do it. But if you are adding software on top, then you're sort of becoming like a hyperscaler, and like a Google or a Microsoft. You have a lot of software tools there where you can sort of build your applications there. So yeah, I mean, and this is why you're seeing like the acquisition of Wheats and Biases, and probably we're going to see more of that. This is a vision, and they're trying to implement that vision, sort of creating an all-stop shop for developing GenAI applications.
Yeah. Alex, we had a question come in from the audience. How has actual performance, they mentioned energy production, maintenance costs, et cetera, of completed projects been compared to initial forecasts? I think you have some data on abandonment rates, if I remember.
Yes, we've got some quite interesting data on that. So we had basically a big rise year on year on AI project abandonment rates. So from around 17% to I think it was around 42% of projects that are successfully piloted but aren't being delivered effectively at production. During that sort of transition period, we're losing around 42% of projects. But I would say in more general terms, with measurement, what we've noticed year on year is companies measuring far more. So they're actually looking at more metrics. And it's really interesting, we look at the metrics they're looking at. It's not the sort of old school data science metrics we used to work with. Primarily, they're looking at sort of business value impact across a wide range of areas. And more companies, again, this first wave of generative AI investments, I say sort of mixed performance. We are seeing success in some areas. One of the things we found from organizations is they're effectively struggling to measure how impactful these tools have been. So in areas like software development, that was quite an easy conversation. You had some quite clear productivity metrics. But there were some other areas where perhaps those metrics were less evidenced or less obvious. And it was a bit harder in that context to understand maybe a generative AI tool makes your employees happier internally. That's quite a hard story around ROI. So I think there's a recognition within businesses that they need to start having a more mature measurement process. And again, we are seeing that sort of filter through in our data. Companies are measuring more, even if not necessarily performing better against those metrics year on year.
Interesting. So, Alexandru, I wanted to talk about some of the differences between both different geographies and different types of AI. I think GenAI gets thrown around a lot to cover a lot of ground. Can you talk about the difference between consumer versus enterprise-focused AI companies? I think Synthesia is more enterprise-focused, if I'm not mistaken.
Yes, thank you. Synthesia is an enterprise-focused generative AI business. Our customer base tends to be, in terms of the revenue generation, our customer base is kind of split between small and medium-sized businesses who pay us a monthly fee and can kind of pay as you go to use the platform, and Fortune 500 type companies who have enterprise accounts with hundreds or even thousands of users, where we're generating sort of hundreds of thousands or maybe even more than $1 million of revenue. And I think what I've seen so far is that success when it comes to generative AI adoption and usage has mostly been kind of focused in the enterprise space. So obviously, we're just one example, but probably one of the most recent example has been software engineering and coding. So a lot of businesses now have discovered that these large language models can be repurposed for coding and are actually pretty good at writing sort of junior level type code, which can then be kind of reviewed and adopted by more kind of senior engineers. So I think we'll see, we're already seeing a lot of companies producing revenue from kind of that type of application. When it comes to the consumer space, I think we've seen a few attempts at building kind of personal assistants and kind of devices that act as a personal assistant. The main challenges with those types of companies has been utility. So it's a lot of these products have kind of the novelty factor. They look very nice in like a Twitter demo, but as soon as you buy them and use them for a few days, you realize that they don't deliver utility. It sounds cool to be able to kind of talk to an AI assistant and I don't know, ask it about the weather, but very soon you kind of realize that that's probably the reason why you're not using your kind of home speaker that much after a few days anyway. So I don't think we've seen amazing sort of applications at the consumer level, but a few companies, including OpenAI, are working on it. So I think maybe in a few months or maybe even next year, we'll start to see hopefully more useful devices and products in that space, in the consumer space.
Yeah, no, that's interesting. It sort of reminds me of like the recent use cases I'd been thinking of had been more almost like a smart glasses type of use case where I'm like, what is that bug? And do I need to be afraid of it? And but I'm not sure I'd be willing to pay however many dollars per month to be able to identify that, does that bug sting me or not? Well, following up on that, you already talked about some of the differences between, let's say, companies in Silicon Valley versus, like you in London or Europe. Can we talk some more about the differences by geography, both in terms of where we are and where we're going with Gen AI development and deployment? Can you walk us through how you're thinking about Europe versus the US and China?
Yeah, for sure. I think when it comes to, I mean, there are kind of certain different ways to kind of think about this. One way of thinking about it is through kind of a regulatory sort of point of view. So I think in the United States, there's no kind of federal level regulation when it comes to AI, and the current administration has been very clear that they don't intend to kind of work on any kind of binding regulation, more on terms of voluntary codes of conduct and things like that. But what that means is that at the states level, we've seen some of the states kind of trying to enact a regulation, and what that means in practice is you have this kind of patchwork environment where different states have different rules when it comes to generative AI. If you move towards Europe, you see, I would classify it as examples of like rushing to regulate before they understand the technology. So the EU AI Act is a classic example of regulation that it's kind of like a Christmas tree. Everyone tried to hang their kind of something on it. And in the end, it's kind of this strange hybrid between product safety and kind of more of human rights type rules. But it's incredibly difficult to enact because of that reason, because it's so complex and so unfocused. It's very difficult to enact, and a lot of businesses, including Synthesia, have been quite vocal about the fact that some of the parts of the regulation, at least, are just unworkable in their current form. China has been actually the most aggressive when it comes to regulating this technology, partly for kind of ideological reasons. They want to make sure that they keep the technology under control. But to some extent, that kind of has provided some clarity for companies developing powerful AI models, and that has led to some acceleration of development within the kind of framework that the Chinese government has kind of set for this technology. And so that's kind of one way of looking at it. But I think another way of looking at it, which is actually quite fascinating, is more the cultural level. So at the cultural level, if you speak to Chinese companies, none of them talk about AGI or superintelligence. For them, it's kind of like, we want to build the best AI models, and we want to use those AI models to build the best products, and we just want to win by building the best product and the best AI model, and win in China, and then hopefully win globally. If you go over to the obviously to the United States, it's all about superintelligence and kind of the race to AGI and who gets there first, and it becomes a kind of more of a philosophical debate. And whereas in Europe, it's a lot more kind of practical. So some of the companies that are based here, they're kind of focusing on specific industries and kind of making contributions to those sectors. So it's been fascinating to watch kind of the differences between the geographies when it comes to generative AI.
Yeah, and I mean that's something we've been paying attention to here in the U.S. with the recent moratorium that was considered as part of the budget reconciliation package on whether they would ban or block state and localities from regulating AI for the next 10 years. Then it became the next 5 years, and then the Senate was just like, we don't want to touch this. And so that's definitely something we've been watching. Alex, you mentioned there is an audience question. Some commentators think that high GenAI companies' valuations reflect the race to AGI, which Alexandru just mentioned, artificial general intelligence, generally defined as skill acquisition efficiency, with the winner of that race taking it all as Apple did with the iPhone, but at a much higher valuation level. Sam Altman suggested in his January 2025 post that OpenAI is on the verge of being there. Any comments on this conjecture?
So I think there's a narrative, I guess, which could be quite compelling if you're an investor. Whether that's realized or not, who knows? But the vision is, I suppose, something you mentioned already, I guess, with the glasses, this idea that generative AI is a way you can interface with other services. And obviously, if you're in a startup position, being an interface between two things is hugely valuable. So you've got that on one side, but you've also got this narrative around AGI and a sort of conceit and beyond AGI, things like the singularity and ASI, and there's all sorts of things called rapid takeoff and all those sorts of things. But the general hypothesis is the company that can first get an AI that continually improves itself could put itself in a position where effectively no other company could catch up, because that rate of acceleration would be so pronounced that would be very hard for any other company to get involved. So if you're basically presenting a vision of a product that's embedded into everything, it's the way you access services, and only one company fits into that niche, that's a remarkably powerful narrative. Doesn't strike me as particularly realistic, but I do think you could be sold on that idea. And I do think some of those valuations reflect that narrative.
Interesting. That is, I like the idea that it is not a conjecture so much as a narrative. So before we move on, we wanted to get to our MQL question. We wanted to know if you are interested in meeting with one of our experts to learn more about our technology and AI market data, news, and tools. We've got a couple of different options here, including our transaction data from S&P Capital IQ Pro, just to give a sense of what that means. That's some of the data that Yuri, for instance, was showing in terms of some of the funding rounds, some of our M&A deals. Yes, I want to learn more about the in-depth coverage of AI from 451 Research. That's the kind of data that our colleague Alex Johnson is presenting, and then C, no thank you, not at this time. So getting back to some of our questions, I did want to ask Yuri about our returns on investment at this point. How do you look at this through a capital returns framework? Is there a reason to believe we are nearing the top of a capital cycle? And Yuri, there might be a lag, but you also might still be on mute.
Yeah. Apologies. You can hear me, right?
Yes, now we can.
Okay. No, I think in that we're still in that early phase where pretty much all investors are getting, well, if you talk about VC investors, they're getting a strong return on their pure GenAI companies. So we're looking at every funding round, valuations go higher. So at least on paper, a lot of them sit on good returns. We'll see what happens when they try to exit. We've seen most recently in 2021, those investors that invested in a lot of the fintech companies at very high valuations, that those late stage investors, they lost money because after that you kind of had that fall in valuations, both private and public. But early investors, they were kind of still good, because they invested early. One of the reasons that we have some data from S&P Global Market Intelligence, the dry powder and the fundraising for early stage venture capital funds has been going up over the past 3 to 5 years, like sort of showing that even those late stage investors, they want to go in earlier on deals. The risk is higher, but also if you get a potential winner, then you're kind of sort of, at least you're not going to lose your money if valuations go down at a certain point. So, but if you're looking at the exit so far, so look at CoreWeave, is one of the first that allowed its investors to exit. They got a pretty good return, and CoreWeave is up more than 200% since going public. Even IPO investors, they got a good return. So if markets continue to go higher, irrespective of what everyone thinks about valuations, that doesn't matter too much. Then the return going to be pretty good.
A question come in around a risk that AI powered is becoming a marketing term rather than a genuine indicator of business value creation. How are funding decisions reflecting that distinction in the current market? I know you've written previously about AI wrapper companies, for instance. So I wondered, how are you thinking about that?
So it certainly seems that, I'm speaking with a lot of investors, always asking, what are you looking into a GenAI company? Mm-hmm. And a lot of them, they're sort of, aside from having your own foundation model, which is, there aren't a lot of companies, but aside from that, I think, people are looking, what does this company, they're asking this question, what does this company have that others don't? And this could be like data, you have like unique data sets or access to that data from third party that other companies don't have. Then you could use use that data to create an interesting product. You could have technology, unique technology that, others don't have. And you might even have like relationships with suppliers or relationships with customers that other companies don't have. So this is what investors are looking at. And certainly with, with every sort of technological waves, you're going to have overuse of certain terms like AI powered, companies that are not really AI, but they claim they are AI. Because in the end, what does this give them? A chance that they're going to get a high evaluation than they're actually worth. And this is actually, a lot of investment bankers are fighting with. They're saying, a lot of companies come to them and they're saying we're an AI company, and give us a valuation, an AI valuation. But you're digging deeper and you kind of that's not there. So overuse, marketing overuse of terms has happened, all the time, and probably going to continue to happen, in the next wave after AI. Now it's AI. Before it was, crypto. Before it was fintech or SaaS or everything. So we're going to have those, but yeah, you kind of, if you look at what the companies, what investors are looking at, when investing in these companies, then have this uniqueness to each of this company.
Yeah. So building on that, Alex, you publish a kind of a generative AI digest. Thinking about some of the stuff you've been writing about, what specific Gen AI applications or technologies are the investors focusing on? Which areas are gaining momentum and which are losing investor interest? Who are the key players, companies, institutions, or funds driving Gen AI investments in Europe and or around the world, really?
It's quite a lot of facets to that question. I think to dive into just one component, I think we already picked up on this before, but code generators is an area of interest. So in the last few weeks, we had maybe getting us back to that A result. We had a company, Base 44, was acquired for 80 million with one employee, which is a code generation tool by Wix. That's pretty fascinating. There's also Anysphere. Cursor had massive funding rounds. We've mentioned Lovable already. Obviously, had a pretty impressive Series A earlier this year. So we are seeing code generators being an area of focus. I think it touches upon one of the things that I spoke about earlier, which is effectively that organizations were looking at, which of these various experiments should we be scaling up? And the ones that they had concrete productivity metrics for, like software development, was a very clear and obvious step forward. And there's some other aspects there as well around, long-term skill shortages within organizations and the opportunity this technology consequently poses, as well as the fact that a lot of the models have proven to be very effective in this area. And we've seen benchmark improvements quite markedly improve over the last 2 years. So that's, I suppose in a nutshell, that'd be one of the areas, code generation.
Did you say $80 million for a company with one employee?
Yeah.
Wow. That's incredible. So, Alexandru, we had some questions come in around sustainability, and that's obviously been a big focus on sort of the data center side. How do you balance the investments in safety and sustainability of AI products with speed and efficiency?
Okay, so I think that maybe those are kind of slightly two different topics. So if we're talking about safety, we've made the decision from the moment the company was started that we're going to put 3 principles at the heart of the company, and we would kind of follow those principles as we grew. Essentially, just very briefly, 2 of them meant that one is we wouldn't generate an AI clone of someone without their explicit consent. So we don't do kind of non-consensual deepfakes. And secondly, that we would apply content moderation to the videos that were created on our platform before they're generated. So before someone makes a video and clicks generate, it goes through this kind of automated flow backed by kind of human moderation. And if we find that they violate our content policies, the video never gets made. And so what that meant is that, yes, we sacrificed some growth and we sacrificed potentially some kind of virality in terms of marketing to building a safer platform. However, what that kind of resulted in the long term is that because we a significant chunk of our revenue comes from Fortune 500 type companies. Those companies don't want to work with companies that don't have good sort of AI governance in place. So in the end, over time, it actually turned into kind of a business advantage. When it comes to kind of sustainability, I think specifically for video, although I think it's changing for text as well, the cost of making AI video is significantly lower in terms of the carbon emissions compared to traditional video. Like traditional video is a very carbon intensive process where you have to take large crews and film footage on site. There's a lot of transportation involved and travel and so on. AI video happens in the cloud. Most of those data centers are powered by renewable energy. So from that point of view, the carbon emissions are much lower. I think there's still a debate around kind of text generation, although I've seen sort of OpenAI, some recent figures that kind of suggest that the emissions for text generation are coming down significantly as well.
Yeah, and just to plug that for those of you who are attending this webinar that are interested specifically in sustainability and data centers, there is going to be a webinar in August that focuses specifically on that topic and renewable strategies for companies. And so for those of you who are interested, please look into our events, and that discussion will specifically focus on if people are still investing in renewables and based on some recent legislative changes in the United States, as well as investments in nuclear and geothermal, all that kind of great stuff. So just a quick plug for that. So I wanted to also ask, Alexandru, I did ask specifically about the US and Europe and China previously. Are there any geographies you wanted to mention that I didn't include in those three categories that should warrant discussion very quickly?
I think one interesting area to look at is the Middle East. I think they have one of the smartest and most aggressive strategies. I've seen some people in the comments referencing sovereign AI. When it comes to this idea or concept, if you like, of sovereign AI, a lot of countries, a lot of governments talk about it, but very few have been as effective as primarily the Saudi Arabia and the United Arab Emirates in terms of executing. So when you look at the execution and you kind of ignore the talk, those two countries have been incredibly good at sort of setting out a vision and then basically executing that vision pretty consistently. There are some other countries like India that are India, Japan, South Korea, and in Asia that are kind of sort of competing. But yeah, when it comes to execution, I would say the Middle East has been very good at this kind of sovereign AI, like building not just the infrastructure, but kind of building some of the additional elements to have to really kind of create an AI industry in their countries.
Well, I think we are about at time, and we covered a lot of ground today. If you have any follow-up questions, please use the Q&A widget and we'll get back to you. For those watching the replay, feel free to reach out via the request demo link in the related content widget. You can revisit today's material as we recorded this session. Tomorrow, you will receive an email with a link to access the replay at your convenience, and the slides will also be available in the related content widget. We would like to remind you that we recently acquired Visible Alpha, which provides sell-side models and granular consensus estimates. Please click the link to learn more about that offering. And when we close out of this webinar, you will be routed to our survey. We'd love to hear your feedback, so please take a few moments to complete it. In closing, thank you, Yuri, Alex, and Alexandru for your presentation and lively discussion.